Hey guys, welcome to this analysis. I'm just going to run through on the Euro-Yen chart. I'm going to do this fairly swiftly. We're about to go into the new year after tomorrow. It's New Year's Eve. So I'll stick this one up so everyone can watch it through and get a little bit of inference on the market. So, of course, as always, we're starting on the monthly chart. Euro-Yen I pick in particular, just to diversify things a bit. I'm always saying about changing your portfolio up so that you're more or less looking to not stick on one asset only or one asset class in particular, but you want to range your risk. Okay, you want to be in the market in different ways. So let's talk about the point we hit over here. You can see where I've just drawn that red dotted line, and you can see where you had this previous high. And also more significantly, you're looking at this because this gives you a nice bit of market inference where traders are in. Okay, it's going to be around here, and that is because you can see those candle wicks come down, and they represent areas where price has previously been rejected. So as you'll probably know, if you've been following me for a while, that's really key for us, because if we look to the past, we can start to predict the future. And you've got these candle wicks coming down, so that's great. Once we return to that level, we know, okay, well, it's likely we'll probably get a rebound, and we do. Now, not only does that happen here, okay, it also happens previously at that last high when you reach this candle wick area here, okay, because there's various ones. And then again when you hit it here. And that would have been your short zone, and I did mention that, and I'm sure lots of people who follow me ended up taking that, which is really good. So now the question comes, what do we do next? What are we looking for now? The market has rebounded off that level. We've hit key price action. We're moving away. What's the plan? So you can see on this monthly chart that the market has already rejected slightly. Now, you would have had traders who were looking for this candle wick here as a point of reference, and you'll notice it doesn't quite get hit. Now, that's probably because just before that, you've got this range of price action which needs to be dealt with first. And often you will have levels that are slightly stronger. If they get hit first, they're going to cause more reaction. And that's exactly what you got there. So if I flick to the weekly and I zoom out slightly, I'm just going to redraw this, okay? You can see what I was talking about is just this candle wick area around here. It's no good, really, guys, looking at the weekly to analyze a market that's rallied so far. That's why we use the monthly. You come off from 114 all the way to 148, so it's a considerable amount of movement. That's why the monthly is better when looking for these long-term reference points. Okay, so you can see clearly the candle wick here, but if you swap to the weekly, it's much harder to identify that level. So just remember, if you have an extreme market, swap that time frame, put it up, because it's going to give you a much clearer picture of what's going on. If you look at this here, you can't really see how that is significant. You need that higher time frame, even sometimes the yearly chart in extreme cases. But now we've had that, we're looking more to the near term. And as I say, you were brought off from this level here, you've come back up, quite a sharp rejection. So we're going to swap to the daily to really zoom in, and we're going to look for nearer term trades. Now, the reason why I say that is because you've had your sharp move up, okay, you hit some early resistance, and you batted straight away, okay, you touched on some key moving averages, but you're now back down to 200 MA, which isn't entirely significant in this situation, but you can see a little bit of reaction. Now, again, if you whack your time frame up to the weekly, you'll be able to see there's minor long zones along here. And that's why you're getting that rejection. So in the near term, I would expect really to look to take this lightly long. I wouldn't be surprised if we do beat this low a little bit. But if you are going to buy it, just buy it lightly. Because yes, you're going to be at long zones. But again, as I always say as well, you know, you're hitting them several times over. And it starts to get a little bit unhealthy. So that would give you your light long here. Anything lower, again, is going to be lightly long. Okay, you're probably going to have trouble on this price action area, and you probably get a bit of movement. Now, that would provide you another light long zone as you come under this previous low. And I wouldn't be surprised if that happens. And that's why we're not loading in. Now, if again we flick up to the monthly, you can see a little bit better on how things have gone. You can see that we're at early support because the fall actually or the rise actually starts down here. This fall is not that significant. So we're probably batter up to 143 area on a rebound. And again, you can look lightly short at that point. That's a little bit clearer on higher time frames. If you just scoot them up slightly, I would expect if we do return here, this is going to be light short zone. And that's because we're hitting those previously hit levels once again. So your light shorts are going to be higher up. You're more or less slowly channeling on this monthly in side-to-side markets. And, anything lower, again, it's going to be a light long. Because the market's sideways, you haven't got clear sentiment anymore. It's a really mixed bag across so many different assets. That's why they're all moving sideways. So I hope that really helps, guys. Let me know if it does or doesn't. Have a great new year. This will probably be my last one for the year. Come along and join us for the new year. There's so much free stuff, and it will greatly benefit your trading. We break down the markets just like this every time. Thanks for watching, guys. See you in the new year.